welcome to TopstepTV. Up next is that Hoag guy and that other guy. Oh yeah, Horn. Hoag and Horn.
Hello, traders, family, friends, people of Earth, pets, non-pets, and everything you'd like to pet. Welcome back here. Welcome back to TopstepTV. This is Opening Call. He's Barbarino. I'm Hoag. And boy, we've got a show for you today. So get yourself ready here. Need some participation in our community chat. So if you are new here, welcome aboard. Grab a seat. Grab a front row seat because that's all we've got here, our front row seats. And I'd like to say hello to our good friend, yes, our trading mentor, the man with the plan, our very own market guru, John the Hoagland. Johnny, good morning, brother.
What's up, Hoag? How you doing? Good to see you.
Mr. Carter.
It's good to see Eddie. Good to see everybody. Welcome to the Opening Call, Thursday, December the 12th. As always, our focus here is always going to be on seeking accurate context in these markets, remembering our risk and remaining patient in our trading. Good morning to the top of the chat. Dan Trader on a streak, top of the chat again. Leaders only. Gigi, good morning. Anastasios, one time. Infinitely, you are in the right place. Nick Nichols, John Jones in the top here. Good morning. Rock solid results. Rich, Man Cave Trades, and Chris Flores. Good morning to all of you. Very happy you are here. Eddie, what's going on?
What's going on? Well, we got some news here, but our lovely educator Anne Marie Band says it's a good day for a good day. I'm all for that one. It's a good day for a good. Yes. All right. Let's get into some business. U.S. stock futures slipped slightly today, handing back some of the previous gains after the tech-heavy NASDAQ closed above the 20,000 level for the first time ever. Dow contract down about 0.2%. We did see the S&P down 0.2%. And also, the NASDAQ fell about 0.2%. NASDAQ composite surged almost 1.8% yesterday, topping the 20,000 threshold and posting an all-time high. It was after the November Consumer Price Index report came in line with expectations, leading traders to anticipate another rate cut for the Fed at its policy meeting next week. Big talk about that, and we're looking forward to that next week. The S&P, the broad market S&P added 0.8, while the blue chip Dow underperformed, falling 0.2. Yesterday, we saw that too. The NASDAQ, S&P sort of dancing to their own beat. Usually they correlate, work together. Eventually, the markets did get that way. But United States inflation revealed a 0.3% increase in consumer prices month on month, annual growth of 2.7. Yes, our friends at Bitcoin. It was in Bitcoin yesterday. I think it hit about 101. But today it's surging again, extending an overnight rebound as a risk appetite was boosted in line for U.S. consumer inflation data. The world's largest cryptocurrency, if you're just crawling out from under a rock, is, yes, it is Bitcoin, has now recouped all of its losses over the past week, while appearing to have broken out of the 90,000, 100,000 range in recent weeks. That's what I've got so far. John, what else you got to add to this day of news?
Well, economic information this morning at 7:15, the ECB announced their rate statement. They were expected to lower rates from 3.4% to 3.15%, and that is what they did. But the big story today is, of course, going to be the PPI numbers that did come out a little bit hot. Markets liked the CPI numbers, a little bit maybe inflationary in these PPI numbers. The PPI year over year was expected to rise from 2.4% to 2.6%. That came out hot at 3%. Month over month, also higher than expected. They were looking for 0.2%. They came out at 0.4%. The core PPI year over year also came out hotter than expected. They were looking for it to rise from 3.1% to 3.2% in November. That came out hotter than expected at 3.4%. The only one that came out as expected was the core PPI month over month, which was expected to drop from 0.3% to 0.2%, and that is where it came out. So those numbers a little hot, a little contrary to what we saw yesterday in the CPI numbers. These PPI numbers are a little bit longer look out. Then we got 9:30, the nat gas numbers this morning, 10:30, 4 and 8 week bill auctions, and at noon, a 30-year bond auction. We will be sure to be paying attention to that, of course. Everybody's favorite store, at least one of my wife's favorite stores, Costco, releases their
Costco.
earnings after the close today. The VIX is pretty much flat. 13.7 last I checked. It was 13.79 yesterday at this time. The yield on the dollar index a little bit lower this morning, 106.62, but it was 106.4 yesterday, and the yield on the 10-year hanging flat right about 4.28 last I checked, 4.23% at this time yesterday's. So we've got, as far as economic numbers and expected economic numbers, anything can happen, but those are the ones we know about. Eddie, dude, where's your crude?
My crude. Gosh, my crude. Um, U.S. crude futures gained 0.3%. That was our friend, the WTI Brent, rising also 0.3. Now, prices steady after rising sharply in the prior session on expectations of a tighter global supply. That was after the U.S. was seen as preparing for more oil sanctions against Russia. Prices are also sitting on gains made after top importer China signaled more incoming economic support earlier this week. Yesterday, we caught her. Yes, we caught her speaking. U.S. Treasury Secretary Janet Yellen stated yesterday that a weaker global oil market could present a chance for additional action against Russia's energy sector. On the flip side, yes, our friends at OPEC and their allies cut the forecast for the oil demand growth in 2024 and 2025 yesterday. It's fifth consecutive downward revision. And government inventories, as Johnny said, oil inventories expected here for the week of December 6th. That's what we got for news here. But what do we got for tip of the week? James, can you post it for us? Yes, a trading plan. Have a plan. This is going to help you avoid FOMO. If you don't know what FOMO is, I'm going to tell you. It's fear of missing out. It's the panic. It's when you hit that panic button. It's when you hit that reckless button. A plan helps you stick to your setups, opportunities that meet your criteria, avoiding unnecessary trades. Also, having a trading plan is going to limit revenge trading if you are committed to your trading plan. And that's one thing I got to stress. Sure, we can all have a trading plan, but a lot of us sort of veer off that path, right? We have to commit to it. Whatever our trading plan is, stick to it. It's going to get you where you want to go. And that's what I've got, Johnny.
Very good, Eddie. Very good. Part of that trading plan is contingencies. When I sit down for a day of trading, when I look at the markets that I'm thinking about getting involved in, getting into trading, and I will set up different hypotheses for what I think might happen. And when one of those hypotheses begins to ring true, then I place that part of my trading plan, that strategy into place in that context, in that particular market. So preparing for when things don't go the way you expect should be part of your trading plan. Have a couple of different hypotheses. When one of those hypotheses ring true, you'll have a roadmap for how to successfully trade that trading day. Always have contingencies in your trading plan.
Beautiful, beautiful. Hey, coming up, fast markets here right after we do charts with Johnny, Anne Marie and Mohammed. I do see that Anne Marie's limo pulled up, and Mohammed's private jet should be arriving at the airport very soon. But we got those two coming in for fast markets. But John, what do you got for our contestants today?
All right, as always, starting with the E-mini S&Ps. Now, we should all be well aware that the equities markets are in rollover. So it would appear that the S&Ps have established a rollover range, much more so than the NASDAQ. We'll see that very shortly. But so far, we have been maintaining inside of last week's high and last week's low. this is going to favor the traders that are trying to establish or accomplish a cheap or profitable rollover. So this is kind of what we would expect in rollover. Now, next Tuesday is probably going to be switch day, where we will switch from the December contract to the March contract. Overall, yesterday on that whole rally, we added 24,000 contracts overall. We added 30,000 contracts in the in the March contract, meaning that we saw some decent rollover action happening yesterday. If they bought the March contract first and then sold the D's contract later, they were making money on that rollover. So a pretty decent day for the roll yesterday, even with a directional market. I think they probably did a pretty good job of it. So again, we're inside a rollover range. While the volume is still in the December contract, the open interest increase yesterday again did occur in the March contract. So we're still trading December because that's where the volume is. Where is price in the area of the rollover range? It's right in the middle of it. We had some important numbers come out yesterday. We had some important numbers come out today. It's going to take the day to find out how traders are going to digest that information. And again, to me, that information was a little bit hot and might increase the probabilities of a rate cut next Wednesday. The market is going to like that, but probably not going to like the PPI numbers. Which one is going to win will be something we'll find out throughout the day today. Now, let's take a quick look at the 30-minute chart. All right. So yesterday, opening, the CPI numbers came out. The market opened at the high from the previous day, rejecting value and continuing to push to the upside. Today, when the numbers came out, overnight inventory was already a little bit short. The knee jerk was really to the downside. We looked at the low from yesterday's session, the IB low, which was the session low from yesterday, and at least we found a little bit of a bounce off of that. I'm looking, at at traders and investors early in this market, looking to see this market continue to push to the downside. We're opening in range and below value. In range, below value. We had a very small overnight range until the PPI numbers came out. That expanded, of course, the range, which it usually is going to do. Right now, we're holding below VWAP. VWAP is looking to the downside, looking like at least early in the market today, sellers are in control. We'll take a good look at this during fast markets, and I'm looking forward to having Mohammed and Anne Marie on with us today. So the profile was a P-shaped profile, but that's not supported by the increase in open interest. A P-shaped profile would usually be short covering. We did not reach all-time highs in the S&Ps yesterday. The S&Ps have been presenting weaker than the NASDAQ. We're going to see what we can find out for our markets here. Looking now into the NASDAQ. So the NASDAQ did put in a new all-time high yesterday, trading above weekly kickoff high. Open interest jumped by 9,000. Now, a little bit of a difference in the NASDAQ and the S&Ps, which probably might be part of why the NASDAQ has been presenting as higher. Now, that we added 6,700 in the December contract, and we added 2,300 in the March contract. We added open interest into an expiring month. That doesn't make a lot of sense to me. There's a little bit of kerfuffleation in that, if you ask me. So weekly kickoff high is going to be, I would think, somewhat pivotal today. We're always looking for the longer time frame participants to make decisions in and around those levels. And when you look at what happened last night, there was very little decision made, even with that increase in open interest at this important inflection level. Is the NASDAQ setting up its rollover range, which again would favor those that have big positions that need to roll out of the December into the March contract. Let's take a look at the 30-minute chart. All right. So yesterday, very similar to the S&Ps, but again, we did put in new all-time highs. The S&Ps put in a new all-time high in extended trading hours. No, it actually was the Nasdaq that put it in extended trading hours. The S&Ps did not put in the new all-time high previously in the extended trading hours. So it makes sense. When the market puts in new all-time highs or new highs, recent highs in the extended trading hour session, they tend not to be lasting highs. Well, now we've done it. We've put in the all-time high in the regular trading hour session. Overnight inventory is short. The PPI numbers came out initially. The knee jerk was to the downside. We are opening in range and below value from yesterday. Here's another example of how the Nasdaq is holding up better than the S&Ps. S&Ps looked below yesterday's low. Nasdaq hasn't come anywhere near it. So similar thing yesterday. We opened in range, rejected value, continued to push to the upside, adding open interest. The auction looks like it's doing well, but remember, it's rollover in volume and open interest can be very blurry. That's why I'm kind of looking at the 2 front months here, trying to balance open interest as to how the rollover is doing. And I think yesterday, at least in the S&Ps, was a pretty successful day for those trying to roll over into new positions from the December to the March contract. Where are we today? We're right at last week's high. Look at what happened in the Nasdaq last night. We closed above weekly kickoff high. All right, well that's a positive, but as soon as we closed, the market came right back to weekly kickoff high, and it walked that tightrope until the London Open, when sellers started to come in. Overnight weaker hand sellers holding positions. We don't see continuation to the downside. We may get better trade location. We may get a move back towards where the market opened up last night, which is pretty much basically weekly kickoff high. It's going to be an interesting trading day today in the equities, as they always are. What about crude oil? I mean, crude oil is, again, a difficult trade, if you ask me. Maybe even if you ask others, I don't know, but very range bound. We've been just going from low to high, high to low, high to low, high to low. I can't wait till I can stop saying that. But again, we were looking yesterday looking for an opportunity at last week's high and at this 100 session moving average. Well, the market really kind of got there. It didn't offer a big downside opportunity possibly until today. So we're up near the upper extreme of the area of balance. Crude oil is also now in rollover. It rolls over every month. It's a bit of a pain in the butt, but it is in rollover. Yesterday's rally, that big rally, guess what we did in open interest? We lost about 500 in open interest. It is in rollover. In January, the current front month, we lost 34,000 in open interest. So another big, probably successful day for the people rolling from the January to the February. If you bought the Feb first and then sold the Jan, you're in good shape. So almost an even roll, with January losing 34,000 and the February adding about 24,000. Well, the future months adding about the same. So decent roll. We're up near the high of the area of balance. Overall, range bound still. Range bound, short time frame control. Take a look at the 30. All right. Crude did not like the PPI numbers either. It looks like the market has opened, didn't even look at the overnight high, looked at yesterday's high. Now coming back into the range here. Was a double distribution trend day, possibly creating the probability of potential repair through the body of yesterday's profile. One of the things that we do want to kind of point out is we did put a late spike to the upside late in the session yesterday. A short spike, the base of that late spike is 70.24. Those of you that have been around know what the late spike is, but the late spike is a push away from the previous range right at the end of the day, where the market closes up there and doesn't really have time to show acceptance through time. Opening above the base of the late spike indicates potential acceptance of higher pricing. Opening below the base of the late spike indicates potential acceptance of lower pricing. To further complicate things today, crude oil opened at the base of the late spike. It held it the better part of the evening and the morning. Now it's looking like we've kind of given up that possibility of acceptance of higher pricing and falling into potential repair area here. Now, my favorite market this week has been gold. And wow, look at that. All right, so the breakout continuation did very well yesterday. We added another 13,000 in contracts and open interest on a decent push to the upside on decent volume. So volume has been increasing and open interest has been increasing. I think we got a little bit hot. We ran this a little bit hot. Really, my first target was this swing high up here around 2750 approximately. We achieved that yesterday. This market could use a pullback. This pullback, I believe, is going to be healthy in the long run for this market to possibly continue to move higher. We don't know for sure, but there are some weaknesses in structure down below that the market seems to be targeting as we speak. We've got the naked point of control from 2 days ago, 27.1160. We just hit that. We just hit that 27.1190 within 3 ticks of it. So we're starting to see overnight inventory continuing to get paid, bringing more sellers into this market. Probably the late to the party longs yesterday are the ones that are lighting this fire to the downside. There's still lots of weaknesses in structure down below that this market can target. I mean, anything can happen. We've got another naked point of control down below here at 26.89.5 that could be targeted. There's a gap. I mean, there's lots of things down below that this market can target. After a very healthy upside move, the downside rip is not unusual. The profile yesterday, the double distribution day to the upside. Now, one of the things I want to mention about gold, and something that maybe we can talk about one day during group coaching, and I know Christy was asking a lot about Delta yesterday. Since the 26th of November, this area, this indecision, this whole balance area here, all from since the 26th of November, every day has ended with negative delta with an increase in open interest. Negative delta, increase in open interest. Negative delta, increase in open interest. There were longer time frame buyers in the market this entire time. And when we broke out, the shorts, more buyers came in and really started to push this market higher. Yesterday's delta was negative 4,400 on an up day with an increase in open interest. There were still buyers in this market and probably longer time frame buyers. They're not going to sweat. They're not as price sensitive as we are unless we get back down below weekly kickoff high 2684. I believe that is the area that they would be likely to protect. But again, that is something we can probably talk about during group coaching one of these days. I have a wonderful example from one of the cleanest examples I've seen of this was back in gold in 2022. Some of you have seen it. Maybe this is something we can revisit during group coaching one of these days. Folks, let's always remember to take a deep breath. Do a little meditation. Do something to get yourself centered. Remember to remain humble, grateful, creative, and centered in your trading. And every day, pray for peace. Let's have a great session today, folks.
Beautiful. Remember, slow things down, take your time moving forward, eliminate FOMO, greed, stop chasing markets, wait for the best entries, and remember, small profits do add up. Coming up here, fast markets, Mohammed in a new expressive funded account locked in an impressive 4,600 yesterday. Anne-Marie zeroing in on the right strategy to find her edge. She took a little loss yesterday, $318 down across 3 combines. And stick around here. Fast markets coming up.
Stay tuned. We'll be right back.
Here we go.
And speaking of being right back, our VMix platform is frozen. We're going to do a hard restart. Look for a new YouTube link coming soon. We'll be back.
Yikes. Okay.
See you soon.
All right. We'll be back.
Turn on CNBC. He's about to ring